Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Tyson Cross. Thanks for being on the show, Tyson.
My pleasure.
Tyson is an active mobile home park investor. He's senior broker at HFO Investment Real Estate, specializing in mobile home parks and multifamily investments. He also hosts the Real Estate Deal Flow and Mobile Home Park Talk podcast. So, Tyson, give us a little more about your background and what your focus is right now.
Sure. Thanks for having me, Whitney. I'll keep it brief. I originally was a teacher out of college. Coached baseball, played baseball, and then slowly was asked to start a business with a friend. Got introduced to business from that standpoint, and then decided to go into commercial real estate. Haven't looked back. I got into commercial real estate as a property manager back in 2012, managing commercial Class A office, medical office, and then from there really knew I wanted to be a broker. And so that's where I'm at today, broker / investor. So
awesome. So, it just hit me. Maybe we could talk to the listeners who are transitioning from, that full-time position like you had as a teacher, and then, growing that business and how you decided to move full-time into real estate. Could you talk about that process a little bit? And I know it's a big topic, and I get questions about that all the time. Just like, you're working full time and how you made that work, and some key things that we need to know about if we're in the same boat.
Yeah, no, happy to talk about that. In fact, I think it's a huge topic as well. A lot of people are in that scenario where they see real estate. There's a lot of information out there, a lot of podcasters like yourself, a lot of people blogging, and it looks really sexy, right? It's enticing. It's like, how do I get to that point? Maybe you're stuck in a job. For me, I was always a teacher, not always a teacher, but I was always in that mindset because I grew up in a household with, my dad was a teacher, my mom was a counselor. Never really got outside that box until I had a friend ask me to start a business. That business was actually selling memory foam mattress toppers, and we sold them to college bookstores. And so the kids would go in the college bookstore, pick it up for their dorm bed. It's called Dorm Form. It was pretty cool. But it taught me a lot about business, number one. It taught me a lot about partnerships. It opened my eyes to business. And from that point, I started to think, well, if this isn't a long-term thing or sustainable thing, what am I going to do? Because I knew I was hooked in business. Like, once I got a taste of it, I realized that's what I should have been doing the whole time. And real estate was something I was drawn to for numerous reasons. But one of the key reasons was I read a book called The ABCs of Real Estate Investing, Ken McElroy. And in that book, he talks about his progression from a property manager of multifamily to ultimately buying his own buildings to where he is now. And, he's a big multifamily investor, very successful, owns lots of property. And so for me, I looked at that and I said, that is the way that I want to go. And once I made that decision, then it became a very clear, so I had a very clear goal. Then I said, well, how am I going to get there? Because I was a teacher. I got a master's in special ed. I was teaching children with autism. No business background outside of the small business I just started. So for me to go from where I was to jumping into, Cassidy Turley at the time in downtown San Francisco, it was a journey. It did not happen overnight. I think a lot of people want it to happen overnight, but it doesn't. And I can actually go back and look at that timeline. It took me about 8 to 10 months from the moment I said, I'm going to go for this, to the point that I actually got hired. And there were a couple of things that I did, several, but a couple key things I think that people can do. And I actually wrote a blog article on this topic. Number one is identify the goal. Like, what do you want to do exactly? And the beauty about real estate is there's so many different things in real estate that you can do. And so what is that one thing that you want to do, number one? And I think you have to explore. You got to read a lot. You got to talk to a lot of people. For me, I did ride-alongs. So I called everybody I knew in commercial real estate, brokers, appraisers, property managers. And I just said, hey, can I go shadow you for a day? Let me buy you a cup of coffee. Let me just ride along with you and see what you do. And so for me, that was a really good way to identify what it is that I liked about commercial real estate. What did I think that my skill set would match well with? And then from there, the second thing I did was, and this is very similar, but put yourself out there. So I went to multiple broker open houses. I kind of identified, okay, I want to be a broker, but how do I do that, right? Because I don't have any brokerage background. And so I started going to broker open houses. I remember I went to Marcus and Millichap's open house in downtown San Francisco. I went to another boutique firm. I mean, I probably went to 4 or 5, and from there started to realize, okay, in order to become a broker, what do I need? Well, I need some savings, because I understand that this takes time to build up your book of business. And ultimately those two things, when you start educating yourself on the different aspects or different things in real estate, understanding what it is that you're trying to achieve or your goal, and then putting yourself out there. Those are 2 really big things. And for me, it took a long time. But ultimately it came down to like the last month. I probably was, I had interviewed for a teaching position and was at my last, kind of effort to get a commercial real estate job. And I was so close. We were about to have a baby, and my wife was she was like, you better go get a job or you're done. I'm kicking you out. And I had a job offer from a teacher, and I said, you know what, I got to wait, because I need to hear back from these people. And I got lucky enough where a really good guy hired me, and the rest is history. So a lot of work, though. It doesn't happen overnight. The key thing is you have to be able to put yourself out there, because this is a people business. And if you want to be in real estate, I mean, you're dealing with people on a daily basis. So.
That's right. And I thought 8 to 10 months was pretty fast too, to switch so 8 to 10 months, you went from full-time teacher to full-time broker.
Mm-hmm. Well, so what happened was I identified as, for me, it was always, once I read that book from Ken McElroy, I was like, I want to be an investor. I want to be a multifamily investor. And so I said, in order to do that, likely the quickest way to do that would become a broker, right? And you're dealing with product, you're selling product, you're dealing with owners, you're finding buildings. At the time, my wife was pregnant, and we needed the security of a salary or an income. And so for me, it wasn't quite the right timing. So I went into the commercial property management, from there transitioned to broker a couple of years later. Okay. So yeah, it happened fast. I mean, I had a deadline. I was working under pressure, and when you're committed and you have a clear identified goal and you know what you want, then I think anybody can do it. It's just a matter of going out and executing. So,
somebody that's thinking about becoming a broker, though, do you recommend that, like getting into the commercial business or commercial space? And, with your experience now, do you say, why don't you go become a licensed agent or a broker, or, do you recommend that?
It's a great question. It depends. For me, I was at a point where I was 31. I had a fair amount of life experience. I think people in that situation can relate a little bit easier to some of these owners, whereas maybe coming out of college, you're still a little green. Relating to these owners can be a little more challenging. So I would say it depends on the person, number one. Number two, you have to be willing to not get a paycheck for, I would say, at least a year. Certainly the market now has shifted a little bit. It's softened a little bit. So I'd say even longer. So if you've got savings and you're able to kind of weather that storm, and you want to be a broker, and you have a clear understanding of what it is that you want to go do as a broker, then go do it. I would say look for a team maybe that you can join, maybe start as a runner and really kind of build some sweat equity, go out and hustle and maybe get attached to a team that can give you a piece of these deals. But no, I think for me, it was fantastic, because starting as a manager or getting the commercial management, you learn everything about real estate, from building systems to leasing, to negotiating with tenants, and so that's a great platform. And so I would encourage anyone, I think if you're trying to determine, hey, should I jump into brokerage or maybe should I go this route? That's a great way to go too. So.
Yeah, I've met, numerous people that have asked or have mentioned about becoming a broker just to get their foot in the door, in this syndication business.
Mm-hmm.
And I just wondered from your experience, but no, I appreciate you laying that out there. And so, are mobile home parks, your choice of asset, or what is it and why?
They are my choice of asset. In fact, I've been brokering multifamily the past 4 years, but I'm moving towards mobile home parks and continuing to do multifamily. There's a bunch of reasons why I like mobile home parks, but I think, and by the way, I still love multifamily. I would love to own multifamily eventually as well. For me, mobile home parks seemed like the right avenue because it seemed like there seemed like there were more opportunities. And I say that because it's still a highly fragmented asset class. It's becoming much more consolidated today. I think you're seeing people buy these much more professional ownership groups and institutions buying these than they were 2 years ago even. But the fact is there's still a lot of mom and pop owners out there. Number one, the main reason I like them so much is the supply and demand. If you look at demand as it keeps going up and will continue to go up, supply is actually decreasing. It's the only asset class that's actually going away. And so if you just take that stat or just that factor alone, they're going to be incredibly valuable in the next 10 years. And then you add to the fact that affordable housing is only going to get more and more of a need, then you've got a perfect storm. So, but yeah, I love mobile home parks. I love apartments. Those two really, I think you can't go wrong with housing. I think if you invest in housing, that's a pretty safe bet for the future.
Who is Vinney Chopra? Came to the U.S. from India with $7 in his pocket, and today he has created a portfolio of over $200 million in commercial real estate. He's a CEO of 5 companies, acquiring and managing diverse multifamily portfolio of 3,500 units, and his team self-manage all the assets. Vinney has walked the walk with over 26 successful syndications during multiple economic cycles, including downturns over 12 years. He has built a very extensive educational academy to teach and mentor investors. Vinney, tell us about this Multifamily Syndication Academy.
Thank you, Whitney. Thank you so much. I'm really proud to really talk to everybody about this extensive multifamily academy that teaches new and sophisticated investors how to use other people's money through syndications. That has been my world, to buy apartments from 50 units to 500 units, and how to select emerging markets, how to do deal analyzing, investor education, other people money, syndication blueprints, everything I have learned, I teach in this academy, and over 500 lectures, and also how to manage the assets also, and along with lots of great templates and PowerPoints, everything. And I personally also mastermind coach all my students every Wednesday. So to reach me, Whitney, all the students have to, or investors have to just text the word learn, LEARN, learn to 474747, or call my team at 925-766-3518.
So, let's dive into mobile home parks a little bit. I don't have many guests that talk about details of mobile home parks and the differences between them and multifamily, and maybe some things that if I'm looking at going into mobile home parks or investing and buying mobile home parks, things that I need to know that coming from multifamily that I wouldn't know.
Yeah, obviously the main differences are, as a mobile home park investor, you typically own the land. You may own some homes. We look for parks where we generally own the land, and most of the homes are owned by the residents. So that being the primary difference, whereas apartments, you're going to own the entire structure and the land. What I like about mobile home parks is the fact that when you're talking about that instance where they own their own home, the residents, typically turnover is much less frequent than apartments. And when you have turnover in apartments, obviously you got to go in and spend some money to fix up the unit more often than not. And you have costs associated with that. So in apartments, I think the average turnover is about 1.5 years. And in mobile home parks, it's about 7 years. And I don't know where I heard that, but I heard that, and it seems to ring true. And so because of that, when you have a park where residents own their own home, there's much less of a management intensive project. So we have a park out in Kansas City. It's a 71 space park. And we have now 3 homes left that are owned by the tenants. And so if you think about that, just from conceptually, we don't have to maintain those homes. The residents do. So if there's something that goes wrong inside the home, those residents are responsible for that. So it becomes a much different management project. And so I would say those are the benefits of mobile home park investing.
So you said 3 of the homes are owned by you all, but out of 71?
Yeah. So when we took over, there were 19, and we since have done a big push to sell those homes. And so we offer those to the residents that are living there. And a lot of them want to own their own home. And so we do a program that benefits them, sort of like a rent to own program. But essentially it basically gives the ownership back to them. We deed the home over to them after a certain period of time. And effectively they now own their home, and we don't have to maintain that. Now, of course, we still, so our job becomes maintaining the park, maintaining the roads, the infrastructure, making sure the landscaping looks good and that sort of thing.
Yeah. So, when if I'm just getting started and looking at mobile home parks, and what are some key things, say, whether from underwriting or due diligence, that I'm going to need to know that I'm not going to be used to looking for if I'm used to looking at multifamily?
Yeah. One of the big differences as well is utility systems. A lot of mobile home parks can have their own private utilities. If you think about these, a lot of these were built in rural locations where maybe cities grew to them. There's a ton of them that are built in the city as well, but you tend to have more variance across mobile home parks in terms of where they were built. And so what we see is we'll see well water, private water system, or private sewer. And that can range, depending on where you are in the country, from septic to wastewater treatment plants, which is basically the park's own private sewage treatment center that the city is on. Or they've got lagoons, and those you see in the Midwest, in the South. So that's a big thing to look for. One of the ways I tell people, if they're looking at like Google Maps and trying to identify parks, it's a great way when you're looking at where to look for parks and trying to identify a market. One of the ways you can tell if a park has those type of systems is, first and foremost, if it's in a rural location, probably a good chance that it's on private utilities. Secondly, if you zoom in, sometimes you'll see what looks like a little pond in the park. And that, more often than not, can be a lagoon, especially if you're in the Midwest or certain parts of the country. Out here in the Northwest, we don't have lagoons, but we do have a lot of septic. And so, those are things to look out for. I think the biggest piece is, when we're talking about mobile home parks, just like any other asset class, you have to understand it. You need to educate yourself and understand what you're looking for, and how that relates to that specific asset. But yeah, those are some things. I think the last thing when you're talking about underwriting is just that component of park-owned home. We try not to value the park-owned homes by using a cap rate. And you'll see a lot of brokers who don't really understand how to underwrite a park. They'll just take the income and expenses, including the rental income of the park-owned home, and they'll apply a cap rate to it. What that does is oftentimes it can overvalue that home. So in a market, let's say, for example, in a Kansas City market where homes go from anywhere from $5,000 to $20,000, if you apply a cap rate to the rental income that is above your lot rent, and I'm sort of getting a little technical here, but
good.
That can oftentimes be more than, let's say, $8,000 to $15,000 or whatever that home's worth. It could be like $40,000. So in other words, you might be overpaying if you do it that way. And so what we do is we take a shell value, just like we would comp a home. We say, what are these homes actually selling for in the retail market? We're going to apply that value, maybe a discounted value, plus the income, the lot rent income. And that's a combined value for the park.
Nice. No, I appreciate you laying that out. And I mean, there's, so much about this asset class that I don't know. But how did you educate yourself about mobile home parks specifically?
Well, there's a great podcast, Kevin Buck, Charles Dehart. They do the Mobile Home Park Academy. They've done a great job. You can go back and listen to that from the beginning, and they provide a ton of value. I went to the Frank and Dave boot camp, Mobile Home University, a few years ago, and that is also good. But I think just like anyone, doing as much, you can only do so much education. Right. And there comes a point when you just have to go out and do it yourself. And I talk a lot about this. In fact, I just did an episode on my podcast about this investor psychology and how so many people get wrapped up in, I need to go get the course. I need to educate myself more. I need to do this and this and this. The reality is you're going to learn more than you ever do once you actually go out and do a deal. And I can't stress that enough. There's going to be a point where you will plateau, and it's just a matter of going out and doing a deal. And some people never reach that point. And I think it happens more frequently than we actually talk about. And so that's one thing I really am fascinated with, is like the psychology of real estate investing, because it's inherently risky, right? I mean, there's risk involved with this business. And nobody wants to lose a bunch of money. But the fact of the matter is, you have to take that risk in order to reap those rewards that you're seeking. And so for me, it was doing the education, putting myself in a position where I knew enough. And then I was like, all right, let's go do it. So that's kind of what I think everybody has to do. So
Tyson, what would you say has been the hardest part of just this real estate journey for you? Or, going from full-time teacher to full-time broker, now, an investor, and growing this business. What's been the hardest thing for you?
It's a good question. I don't know if I could pinpoint the hardest thing on this journey, but I will tell you, one of the things I think about on a pretty frequently, being a broker, is like riding a roller coaster. And for anyone who is a broker out there understands what I'm talking about, but we live in a world where we only get paid when we close a deal. And so very important to be consistent in your actions, maintain that level, just that level-headedness, and understand that if you can keep completing those actions on a daily basis, you'll be successful. And then the second thing for me is just, wanting to be further along than where I am. I have a goal for my investing, or my goals for being an investor, and trying to find ways to speed that up. And I know a lot of people are in this position. They're like, I have a goal of making X amount of cash flow, or maybe owning 100 doors, or you've got those goals, but it's like, how do you want to get there quicker than you are? So just understanding that this is a long-term business, and keeping that mindset and focusing on those daily activities that'll get you there. So
what's a way you've recently improved your business that we could all apply to ours?
Well, I mean, I think putting yourself out there, like I always talk about, so starting a podcast for myself, I started a blog. And so just putting those things out where it's pretty uncomfortable at first when you do it. And I'm sure this, the first time you interview a guest, it's a little weird. But the reality is a people business. The way that you're going to have success is by putting yourself out there. Do things that make you uncomfortable. The only way to grow is to become uncomfortable and to be comfortable with being uncomfortable. And so I can't stress that enough. You've got to do that. And the most successful people are the ones that do that. So
is there a need in your business right now that you'd like to put out to the listeners?
I need you guys to listen to my podcast as well as Whitney's. No, I don't think I have a need. I mean, for me, it's just, continuing to look for those good deals, looking
Yeah.
for mobile home parks and properties. So
Awesome. How do you like to give back?
I love to volunteer. One of the foundations I volunteer for is Junior Achievement. There's a couple other ways that there's a couple other things we're exploring. I forget what it's called. I think it's called it's not the Compassion Project, but there's another, we sponsor a child. I forget what that's called. And then we give back to our church on a daily or weekly basis.
Awesome. Well, Tyson, tell the listeners how they can learn more about you and get in touch with you.
Yeah. So you can go to my blog at TysonD, as in David, Cross.com. And then you can check out our show, Real Estate Deal Flow Podcast, or go to the Mobile Home Park Talk podcast as well.
Awesome. Tyson, thank you so much for your time today. I really appreciate you being on the show, and I appreciate the listeners being with us. I hope you'll also go to LifeBridge Capital and connect with me, and also go to the Real Estate Syndication Show Facebook group so we can all learn and grow our businesses together, and we will talk to each of you tomorrow.
Sounds good. Thanks for having me, Whitney.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.